Welcome back, everybody. We'll get ready started with the Robinhood app. So as you can see, I'm up $6.50 today, down slightly for the week, but for the last month, I'm up $16. So as you see, the market kind of bounced back a little bit. My portfolio also bounced back a little bit. One thing I want to point out is you can see that I have a lot of cash not invested in stocks, so I've started to leave it liquid. Actually $665. So a good chunk of my portfolio is liquid. And the reason for that is I've seen some more news come out that has forced me to have less faith in the market. And I'll get into that in a second. So what I want to do is change gears a little bit. I like the idea of dividend investing, which is how I started. I'm going to continue to do that when the market bottoms out, or when I believe that the market's bottoming out. I'm going to go back into dividend investing and value investing. But at the top like this, I don't think it's the best way to make money right now. So what am I going to do instead? I'm actually working on researching selling naked put options. And in order to do that, you have to have a lot of capital saved up. So for instance, if I wanted to sell an option on a stock that's $15, I have to have $1,500 set aside because each underlying option is 100 shares. So I'm starting to stockpile cash so I can actually get into the naked put option selling, but I'll cover that whole strategy in a different video. But that's why my cash isn't invested. So I'm still putting money aside to invest, but I'm just not actually buying stocks with it because I'm saving up. All right, so the news that came out recently that made me question the market. I spoke in other videos about how I think that the rising interest rate in the overall corporate debt, personal debt, and government debt is going to be a problem, and I think that's going to lead to rising interest rates. And when that happens, I think it's gonna any company that's over leveraged, so any company that has a really poor debt to equity ratio, I think they're going to be in trouble. And now we're actually starting to see this today. I'll show you too. So we've got Toys R Us. Farewell, Toys R Us. We will miss you. They're filing for bankruptcy. They actually filed for bankruptcy already. And then we have iHeartRadio. They're preparing for bankruptcy as soon as this weekend. And the interesting thing with iHeartRadio was that amount of money they're making, like their revenue, wasn't even enough to pay off just the interest that they owe on the debt. So never mind the debt itself, just the interest that they're paying on the debt, they couldn't afford to pay anymore. And that's what I spoke about in previous videos, that these over-leveraged companies, when the interest rates rise, they're not even going to be able to pay what they owe. Because what happened was they had all this free money. So interest rates were near zero. So they just pumped all this free money into the market, right? Into the entire economy. So when the money's free, people took a lot of it. So they're taking out these loans because it's basically free money. There's 0% interest rate. Well, now that the interest rate's rising, if that loan wasn't a fixed rate, it's going to balloon up. And now all of a sudden they can't afford to pay what they could before. So if they could afford to pay 0% interest rate, can they afford 1%? Can they afford 2%? Can they afford 2.9%? So that's the question. And I think the answer is what we're starting to see here. So what I'm going to start covering on this channel are companies that are going bankrupt, and hopefully we'll see if there's a trend forming or a trend starting. But here are just two that I heard about today. So I'm gonna keep a closer eye on this. All right, so shifting gears. The reason this video was late, there's a lot of things that happened this week, and I'm really starting to shift gears. So like I said, I'm kind of going away from dividend investing. I'm keeping what I have. I'm not selling off. I sold off a couple positions. I sold off stocks that I didn't actually research before buying. I just bought them early on because somebody else was talking about them. And I only sold those types of stocks if they were in the green. So I only sold off stocks that were profitable. And I'm holding on to the ones that I actually researched, whether they're profitable or not. So one thing also is that this calculator that I used to use, I'm no longer going to be using this because I discovered that I can go to Thinkorswim, and basically they've done this for me already. So I was wasting some time, because now I can search and I can put in all that criteria that I was searching on my Excel list, and it'll search it in live time up to date. So that was one thing, was my list would age. So if I didn't research a stock for a couple months, that data was old. Now I can search live all the stocks that exist. That was the other thing, is my calculator was only stocks that I was actually actively looking into. Now I can just run a search and look for everything all at once. So depending on what I'm actually looking for, like let's say price to book value, price to earnings, dividend yield, I can actually just run a search with all my criteria and then do a scan, and I can look at, like I could search by dividend yield if I wanted. So like here's a company with a good current ratio, good dividend yield, decent price to book value. So really I don't need that Excel calculator anymore. It was a good start because I got some practice with actually looking up fundamentals and learning what to look for, learning about value traps. So I'm glad I did it, but I just don't need it anymore because the Thinkorswim app does that all for you, which is really nice. So anytime I want to look into a dividend stock, I can just put in my criteria, hit search, it searches all the stocks, and I can, just like I was with my Excel calculator, I can float to the top whatever I want to look at. So that was one thing that changed. So that's one thing I learned over the week. The next thing was I've started putting more focus and some money into my passive income stream, which I've chose eBay as my passive income stream. All right, so what am I doing with eBay? I walk into, let's say my wife wants to go to TJ Maxx. I walk into TJ Maxx, I go right to the clearance aisle, and I pull up, I pick an item, and I just take my phone and I scan the barcode. And what that does is it puts the item right into the eBay search query, and it'll pull up all of the listings for that item. Then all I have to do is sort it out by sold, so I can see what they actually sold for, not just what people are asking. And I can get an instantaneous idea of what that item will sell for on eBay. So if the clearance price is significantly lower than what I can sell it for on eBay, I just buy it right there. I come home and I post it. Some things I'm starting to learn. I learned that the eBay cut is 10%, which I didn't know until I took a loss on an item, and that PayPal also charges a cut of 2.9% per transaction plus 30 cents. So going forward, I'm going to start calculating that cost into my price before I sell it. And what I'm doing is I'm aiming for about, obviously I would like a huge return, but I'm aiming for a minimum of 25% return, because I figured if I had my money in a mutual fund that was making 25%, I'd be really, really happy. So if I can make 25% per item, so if I buy it at a $100 clearance price and I unload it on eBay for $125 plus whatever the percent is for eBay and PayPal, then I'm happy with that. I'm happy with a 25% return. And if I could keep doing that over and over and over again, I know that my money will grow. So that's the side business I'm working on. And I'm also using Excel again to just kind of keep track of what I paid for an item, how much I received, how much it costs to ship. I'm just keeping track of every penny so that there's no chance that I might actually take a loss and not know why. So every penny's being tracked, and hopefully my goal I set for my business is by fiscal week 15 to have a net balance that's positive. And the reason it's so negative right now is I had to buy a printer, and I decided to put that into the cost of the business instead of just paying out of pocket. So hopefully the business will at least pay for the printer, and then I got a free printer out of this. And then some box and some tape, some shipping supplies. So I'm keeping track of every single expenditure that I spent for this side business, and hopefully I can start turning out a net positive balance by fiscal week 15. And then it should just grow from there. Now, I looked into drop shipping, and I've got a bad feeling about it. Drop shipping is where you take an item off of site from like, I think it's Alibaba or DH list. They're basically these Chinese warehouse websites, and you can buy bulks of items for really cheap, and then you sell it on eBay. But what drop shipping is instead of actually buying it, owning it, and then selling it on eBay, what they do is they just wait until somebody orders one, and then they drop ship it off of that site. So they order it on that site, and then for their shipping address, they put the eBay customer's address in. So you get the money, and you never actually see the product. The warehouse ships it directly to the customer. Now, I see where there's a lot of potential to make a lot of money, but for some reason, it just doesn't feel right. I'm not sure why. I just get a bad feeling about it. It doesn't seem honest. I don't know how it's different from picking something up at a store that's cheap and reselling it on eBay, but it just seems like I don't trust it. If I can actually own the item for a little bit, I can look at it, I can see the quality, I know what I've got. But if I've never seen the item and it's just going from China, some Chinese warehouse to a customer, I don't think it's a sustainable method. I feel like I could get a lot of negative review on eBay. And as of right now, I don't know if I'm going to change my mind in the future, but as of right now, I don't want to pursue that route just yet. So I am starting the eBay side business, and that's how it's going so far. So I don't have a stock to review. Nothing really popped out this week as something that I wanted to advocate or anything that I thought looked really, really good. The market is really confusing right now. Like, tech companies are still going up, but other companies are doing poorly, like the energy is doing poorly. But I just didn't see anything stand out that I wanted to grab or anything that I wanted to discuss. So I'll get right into the goals. 200 invested. I put the 200 aside, but I did not invest it yet, so it is ready for investing. Sober. Yes, I am sober still. I've been too busy to think about drinking, and I did not come up with a strategy for sobriety this week. 0.6 pounds lost. Yes, I actually down to 219.0, and my target for fiscal week 10 was 230.6. Some changes I made. I just started doing a little bit more exercise. I've been pushing myself a little harder when I swim, and I've been watching calories that I consume through drinking beverages. So now I'm really just sticking to the tea and the water, and I'm trying not to slip up and drink anything that's got a lot of calories in it. And as far as eating, I've been trying to just, if I'm snacking, it's on something healthy. Just trying to make better decisions with what I eat. But I'm happy with the progress so far. So 219, I'm good with that. So I lost the 0.6 pounds, and I'm still at just the 5 subscribers. So I haven't gained any subscribers yet. But to be honest, I haven't really done a lot of networking this week. I've been busy on the passive income, and then researching selling naked puts, and then learning how to use the scanner on Thinkorswim. So this whole week has just been a lot of information gathering, and I haven't been proactive in pursuing growth of the YouTube channel. So I will focus on that on another week. Thank you for watching, and if you know of any companies that are going bankrupt or are going to file for bankruptcy, just let me know in the comments. I'll include them in the next video. And if you have any comments on selling naked puts, if you've tried it before and it doesn't work, or you have any pitfalls to watch out for, please let me know. And next week, I'm probably going to cover the actual strategy I'm going to use and why I think it's going to work. So wish me luck, and in the meantime, stay profitable and stay sober, and thank you very much for watching. Bye.